Hello my dear students, hope your paper went well for the CA Foundation Accounting September attempt. In this video we'll quickly have a look at what were the type of questions that has been asked and what would be the expected solutions and how difficult was this paper on an overall perspective. Now as I have been telling even earlier, I have told this, there is a specific pattern in which exams are conducted and questions are asked. For example, partnership, final accounts, NPOs, right, rectification of errors, BRS, all of these are repeatedly tested topics where students can score really good marks. So let's have a look at these questions and see whether there was any tricky adjustment or what was the overall level of difficulty of this particular question paper. So to the first one, as usual, it is a true and false question. True and false question based on whether it is true or false and along with the reasons. The first one is nominal accounts are balanced at the end of the accounting year. This is a straightforward question. We know it is not balanced. They are actually transferred to P&L. Overall expenses of second-hand machinery purchased are revenue expenditure. Overall expenses of an existing machinery is a revenue expenditure. But if you are buying a second-hand machinery and you are carrying out some overhaul of it so that the life increases, the functionality improves, it is a capital expenditure. Valuation of inventory at cost to net realizable value is based on the principle of conservatism. Of course, it is thing. A promissory note can be made payable to the bearer. It cannot be made payable to the bearer. Only RBI can make it payable to the bearer. The receipts and payment account of NPO follow accrual concept. Receipts and payment follow cash concept. Legal heirs of deceased partner are entitled to his capital account balance only, not only the capital account balance. The share of profit and all of those things, the reserves, the current account, all of those they have a right to. So very simple and straightforward questions, and I hope all of you have done it right. 12 out of 12 should be here without any problem. Then the simple concept of differentiating between bookkeeping and accounting. So you can write the definitions and you can do the differences. Pass the journal entries to rectify the following errors using a suspense account. So generally they ask for 5 marks. So this time they have asked for 4 marks. Goods of the value 500 returned by A were entered in sales day book, and from there to the credit of his account means what? They are posted in sales day, means sales has gone up. So we will rectify that. It has gone to the credit of his account. Is that correct? That is correct. So that is not to be adjusted. So what you have to adjust? You have to show the sales return. You have to reduce the sales and to suspense. 250 return in the sales return book has been posted to the debit of Mr. R. We should have credited to Mr. R. Now by what impact? 2 times you have to do the impact. Sale of 700 of to Mr. Q was correctly entered in the sales day book but wrongly posted to the debit of S as rupees 70. So from S we will remove 70 and to Q we will add 700. Again a straight one. The total of discount allowed column of the cash book for September was not posted. We will just post that entry and we are done. Okay. So again a straightforward rectification, no challenge at all. Then, sorry. Cash book of Hari showed a debit balance of 1,36,800 which was in disagreement with the balance as per passbook. 10 marks question. Following discrepancies were noticed. Dividend of 18,000 was deposited. So if it was deposited, the bank balance will be higher. We will add it. Checks issued to Suresh 14,780 recorded as 14,870. So the difference will be the adjustment. Checks totaling to bank were not cleared. Simple adjustment. Medical premium was paid as per the standing instruction which was not recorded. Simple adjustment. So basically you will reduce it. Goods 1,60,000 were sold to Ajay. He deposited a check on 15/12 after deducting 4% cash discount. Entry was missed. So means what? 1,60,000 is the value minus 4% is the amount that we have received in the bank. So you will add that amount. Bank charges you will deduct. Hari received UPI of 1,029.12 for sale of scrap. You have not entered, so this will increase the bank balance. Checks amounting to 1,80,000 were issued during the month, but checks of 1,44,000 were presented during the month. So the balance were not presented. Because they were not presented, my bank balance would be higher. Again, a simple, no problem question. I think all of you would have got 10 out of 10 in this particular bank reconciliation question. Then we have this, one on bill of exchange. Harry draws a bill on Sejal for 60,000 on 1st of January. Sejal accepts the bill and sends it back to Harry to get it discounted for 56,000. Harry remits 1/4 amount to Sejal. So this is a accommodation bill entry, and that part, similar questions are there in the study material, and this is a straightforward question. Again, if you have practiced, you would have been able to do it. On the due date, Harry was unable to remit his share and rather accepts a bill of 80,000 for a period of 3 months. This bill was discounted by Sejal for 74,600. Then they sent 3/4 amount. On maturity, Harry became bankrupt and he stayed paying 40% in the rupee. So here they have also asked to prepare journal entries in the books of Sejal and ledger account of Harry. So again, straightforward question from the study material with the number changes. I guess you would have been able to crack this. Then following is the trial balance of the proprietor on 31st March. Prepare a trading P&L account and the balance sheet. So, plant, furniture, office, motor van, debtors, cash, wages, all of these are simple, straightforward items. And this area of capital, creditors, sales, bills payable, PBD, return outwards, and discount received. Okay. Then closing stock, straight adjustment. During the year, plant and machinery was purchased for 3 lakhs, but it was debited to purchase account. So, what you will do? You will bring back, reduce the purchase account by 3 lakhs, add it to plant and machinery. 3 months of factory rent is due but not paid 3,000, you will show it as outstanding. Provide depreciation at 5% per annum on furniture. So whatever is the furniture value, 5% per annum, that is on the full value, and 10% on plant and machinery and motor van. Now when they say 10%, they are not said per annum. So on this purchase also, you will take 10%. Further bad debt is 7,000, PBD to be increased, provision for discounts to be made. Now tell me, where will you get a question which is easier than this in the final accounts? Okay, again, one of the straightforward and simple question. The following balance sheet, the next one, balance sheet of Krishan Bala, sharing profit and losses in the ratio of 3:2. Only thing is that they have asked for 10 marks. Okay, so the problem could have been lengthy, but it was solvable. Balance sheet of Krishan Bala, sharing profit and losses in 3:2 ratio. Capital accounts, general reserve, workman compensation reserve, creditors, EPF. So again, standard items that we see in the study material questions. Land and buildings, plant, stock, debtors, PBT, bank, advertisement, expenditure. So there is a debit balance, maybe a prepaid expenditure, or they have just capitalized it. On admission of Sobha for 1/6 share, it was decided to value of land and buildings to increase by 5,000. Value of stock to be increased by 3,500, PBT to be increased by 1,500, liabilities to workman reserve was determined to be 8,000, so balance becomes again to the partners. Sobha was to bring further cash of 20,000 as her capital. Sobha brought in her share of goodwill of 12,000 in cash. Now this 12,000, whatever she has brought in cash, you will distribute amongst the remaining partners. So all of these adjustments you will do in the revaluation account and prepare the partners capital account. Again, straight one. Then XYZ 3:2:1 ratio. Okay, then you have in some investment fluctuation fund, workman compensation, trade creditors, EPF. So, am I reading the same question? No. See here, the benefit this time you have is EPF, workman compensation, right? They are repeat items. I don't know how did they do it, but they are repeat items. Then you have goodwill, patents, machinery, investment, market value 27,600, stock, debtors, PBT, cash at bank. Jet retired. So, if you know admission, you can handle retirement also. If you know admission, you can handle retirement also. And because you can handle retirement, admission and retirement, if you have done partnership thoroughly, 20 marks out in your pocket. Even if you had done some adjustment mistakes here and there, 12 to 14, 14 to 16 marks was easily scoreable in this particular question. Goodwill was valued at 60,000. So how to handle this? There are two ways. One, write of this goodwill and then for the new goodwill amount you do the partners adjustment, or only for the differential you do the adjustment to the partners. Normally, we have done one problem in the class. Earlier we had a question in the study material where they had goodwill given in the balance sheet. We have that problem in solution given in our classes also. Instead I removed that question and they have asked that question in this examination. Okay, value of patents was to be reduced by 20%, machinery to 90%. So here by 20% to 90%. PVD to be raised to 10%. Liability of provident fund was only 6,000. Workman compensation to the extent of 6,000 is to be created. Z took over investment at book market value. So what you will do? Whatever is the market value, you will debit that amount to Z and whatever is the gain, that will go to your revaluation account. Amount 50% on retirement, 50% of balance within the year, and balance by bill of exchange without interest. You are required to show entries for treatment of goodwill, revaluation account, partners capital account, and the balance sheet. Again, straightforward, simple question. Then question on NPO, cash in hand opening, okay, then donation, subscription, all of those things are there. Salary, repair, standard items, billiard tables, paper, ink, all of those things. Subscription in arrears, insurance premium outstanding, miscellaneous expenses prepaid, 50% of donation to be capitalized, so balance you will take it to the income and expenditure. Interest fee is revenue. 8% interest is accrued on investment for 5 months. Table costing 30,000 was purchased during the last year and 20,000 were paid for it. Means what? Last year we purchased 30,000, we paid 20,000, and this year we have paid 10,000. So that's a simple adjustment here. But what did they say in the question? From the following, prepare income and expenditure and balance sheet. Again, standard question itself. Then physical on inventory, 5 marks. Physical verification was done on 23rd of June. Value of stock was 480. The following transactions took place. We have to do the adjustment. Goods sent on consignment. Purchase of 40,000, out of which only so much was delivered. Sales include goods so much on approval. Goods are sold at this cost plus 25%. However, 24,000 has been sold for 12,000. Standard question from the study material. Okay, nothing critical here as well. Then they bought a PQR bought a computer on 1/4 and charged depreciation on 20% per annum on diminishing balance method. They made further additions as follows. So much was the addition. It was decided to change the method to straight line. Prepare computer. All the computers expected life is 8 years. Prepare account for 31st March 24. Again, straightforward question, no adjustment here as well. From the following information, where the books are maintained in single entry system, he is not able to ascertain the amount of bad debts and seeks your help. Debtors 650, another debtors 850, that's opening and closing. Sale is 160, out of which 80% is on credit. So take the opening balance, 80% put it to their account, and this is the closing balance. Payment received 750, so credit side. Checks worth 18,000 were dishonored, so they will debit it. Bill of exchange accepted 290, credit side. Discount allowed 1% on credit sale, credit side. So after doing all of that, you will get the closing balance, the balancing figure of the debtors, and that will be your bad debts which has been incurred. Okay, so because the closing balance is given, the difference, the balancing figure on the credit side that you will see will be the provision for bad debt. XYZ is an unlisted company, 12% debentures at discount of 5% was issued. Interest is payable annually. The debentures are redeemable at a premium of 10%. The company invested in specific securities for the redemption of debentures. Entire loss and issue to be booked in the first year. You are required to pass the journal entries. Straightforward question. Issue and the entire expenses will be done on the discount will be expensed in the first year itself. And then whenever you are redeeming, every year when you are redeeming, you will pass the entries, and the requirement of DRR and all you will record. Then this is again a standard question which keeps on coming for 15 marks on shares issue. P Limited issued 60,000 shares of 10 each, 5 on allotment, 3 on application, 2 on premium of 2 per share, payable 3 on application, 5 on allotment, and the balance in 2 equal call amounts. Application were received for 8 lakhs. Pro rata allotment was made. Excess was allotted toward adjustment. 1600 shares failed to pay both the calls and were forfeited. You are required to pass the journal entry. So here only forfeiture, reissue of forfeiture is also not there. So this question, if you look at past all 5-6 attempt papers, every year you get a question like this for 15 marks. So with a proper practice, you would have been able to score well. And a theory question on periodic system and perpetual inventory system. Now overall, if you ask me, paper was easy, slightly on the lengthier side, and with the proper conceptual understanding, you would have been able to manage this pretty well. Thanks for being here. Very soon we'll be releasing the solutions of this question paper as well, so that subsequently after your exams you can start having a look at it.